Good morning, everyone. Good morning.
Good morning, sir.
Okay.
Morning, sir.
Yeah, welcome to PSAF class. So this morning, we are going to look at two different topics. One of the topics we are looking at is called market failure and business cycle. After that, we now go to cost outcome analysis. So we will start today with market failure and business cycle. I've sent the lecture material, I think last week. So I will just explain them, and we are going to look at some of the likely questions in them. After that, we move.
Can you resend? Some of us were not on the group chat last week. Thank you.
Okay. So I will do that. So please, for those who are in the group chat, let me resend the material. Let me resend market failure and business cycle and cost outcome analysis. So let me resend it. So what do we understand by market failure? Market failure can be defined as a situation in which market is no longer efficient in its allocation of resources. A situation where market is no longer efficient in allocation of resources. What does this denote? This implies that market failure means when the law of demand and supply is not effective again. What is the law of demand? We know that the higher the price, the lower the demand. Why the lower the price, the higher the demand? That is the law of demand. As the price is going up, the demand will be going down. As the price is going down, the demand is increasing. When that law does not apply in the market again, that means that market has failed entirely. So it's no longer efficient in allocation of resources. We don't use law of demand to allocate resources. When that situation happens, what market failure implies? Despite that the price is increasing, the demand too is still increasing. When the price is going down, instead of the demand to be increasing, the demand is going down. That is market failure. That means there's no law of demand and supply again. That is what is called market failure. Now, what are the sources of market failure? What are the sources of market failure we have? What are sources of market failure means? What are the causes of market failure? Why do we have market failure in an economy? So why do we have market failure? Because market failure does not provide a panacea for economic problems. How do we solve economic problems? Is by applying the law of demand and supply. But when there is market failure, what are the causes of this market failure? One of the causes of market failure is monopoly. Monopoly. What does this imply? This implies that when we have only one seller in the market, if you are the only one selling in the market, even if you are increasing the price, the demand will not go down because the consumer don't have any option they don't have any alternative. You are the only one selling. Example of monopoly, let's say for instance, Dangote refinery. That is the only refinery we have in Nigeria. Let's say we don't normally import fuel in Nigeria. If we don't import fuel in Nigeria, and we have only Dangote refinery supplying us refinery products in Nigeria, PMS or diesel. If Dangote refinery increase the price of the liters, you understand? The demand will not still go down to some extent. It's still going to be increasing too. Because people will have to live, they have to enter transport, they have to own jet. But since it is only Dangote refinery we have. We don't have any option than to buy from him. Assuming we have other alternative now, maybe there are more than 3, there are more than 5, there are more than 6. Dangote refinery will not want to increase its price because he knows that he has a competitor. So having a competitor or monopolistic market will reduce market failure. When a market is monopolistic, that means we have too much of seller. Do you understand? Suppliers. In that case, there will not be market failure. But when you have a monopoly, there's likely there will be market failure. Another sources of market failure that we have is called externality. Externality. What does externality mean? What you are doing, the activities of one party, the impact of activities of one individual. What impact is it creating for another party? Do you understand? Example of externalities: air pollution, noise, all these things, they have effect on another party. Pollution, company, factory. Let's say, for instance, where Dangote refinery is located. So can you imagine those who are staying in the area? It will have negative effect on them in terms of pollution, and in the long run, that can result into health hazard. As Dangote refinery is making money, do you understand? Some people, they are having, is impacting negatively on some other party. That is what is called externalities. You understand? That is what is called externality. When we have a noise environment too, maybe where we are doing our lecture, the students in that environment, they normally disturb, making noise and don't want like that. They are using their home to affect the lecture, the student that they are obtaining lecture. Do you understand? So they are using, so that is externality. So one of the causes or sources of market failure is what? Externality. Another sources of market failure that we have is uneven income distribution. Uneven income distribution. In the economy, we have the higher income earner, we have the lower income earner. We are not earning the same income. Some people, they are earning 70,000. Some people are earning 80,000. Why some people, they are earning 2 million? Some people are earning in a month 5 million. Since our income is not the same, this is going to result into market failure, because those who are higher income earner, if there is prices of goods and services, if the prices of goods and services increase, they will not feel it. They will buy it. Maybe you are staying in Lekki, you are staying in Banana Island. They now say, price of PMSO is now 3,000 per liter. Some people will still drive cow, even if they are selling 1 liter, 5,000 naira per liter. Some people will still drive car because they have the money compared to those who don't have the money. Do you understand? So uneven income distribution is one of the causes of market failure, which is one of the sources of market failure. So ideally, we have 3 sources of market failure: monopoly, externality, and uneven income distribution. So the next area we need to go: justification for government intervention in the economy. Why will government intervene in the economy? Why will government control the economy? Justification for government intervention in the economy can also be referred as macroeconomic objective of government. Macroeconomic objective of government. Why does government need to control? Why does government need? They are the one that will fix the price. Dangote refinery will be selling PMS. They are the one that will fix the price. Electricity company will be charging us. They are the one that will fix the price. we are going to buy prepaid meter. Why does government are the one that are going to freeze the price? We are going to pay for school fees. Why will government need to intervene in the economy? We call it macroeconomic objective of government. What are the macroeconomic objective of government? They are the reason or justification for government intervention in the economy. So, number one macroeconomic objective of government is called to provide full employment. To provide what? Full employment. What does full employment mean? One of the reasons why government intervene, why government too has their own business, why government too are controlling disco, why government are controlling refinery, is to provide full employment. Full employment does not imply that 100% everybody will get employment, but at least the rate of employment will reduce. To some scholars, they believe that full employment means maybe when they look at the employment rate in the country, 75% of the able body they are employed. That is what full employment means. Government, they will create some company, they will establish company, they will have company, they will have business, they will set up local government. All these things government is doing is not for their own sake, it's for the masses, so that the masses can be employed. Government role, one of the government's responsibility in the economy is to look at everybody to get something doing. It's government responsibility. It's not that providing job alone. Provide government, even if government does not provide job, for the private sector, they should provide enabling environment for them so that they can be employing people. Government cannot employ everybody. All of us cannot work in CBN. All of us cannot work in FRS. All of us cannot work in ministries. But government should provide ease of doing business to private sector. Those who are in private sector, government should provide enabling environment to them or ease of doing business to them so that they can be employing people. Government should not make economic hostile to the private sector. That is what full employment means. And it does not mean that everybody will get job. No. Full employment too, in other direction, can mean government should ensure that they create what is called an empowerment program, skills, entrepreneurial program to the youth. Government should delete the ideology that after you finish NYSC, it's for you to see white collar job. No, everybody cannot work in office. Everybody cannot do this. But some people, they are very good in entrepreneurship, even if they are after their graduation. Mentor them, encourage them, support them, give them an interest-free loan so that they can start something. That is the only solution, because government cannot employ everybody in Nigeria. Private sector cannot employ everybody in Nigeria. So that is what full employment means. Another macroeconomic objective is called general price stability. To ensure general price stability. What does it mean? General price stability means to ensure that the price of goods and services is stable, to ensure that the foreign exchange rate is stable. Government need to do that. It's one of the roles of government. Government need to control private sector. Private sector, this is the profit margin you need to be making. Don't be increasing price of goods and services anyhow, so that people can, it will not be so worrisome for the consumer. So government need to control price of goods and services. Government, they need to tell Dangote refinery, this is the highest amount you can sell your crude oil. Don't sell more than this. Electricity company, this is the amount you need to charge per kilowatt. There should be consumer protection agency that will control the consumer, that will be controlling the company. Price stability. so that there will not be inflation in the economy. General price stability will reduce the rate of inflationary effect in the economy. So I hope my explanation is clear on this. Another macroeconomic objective of government, which is the justification for government intervention in the economy, is to ensure equitable distribution of income. Equitable distribution of income means to reduce gap between the higher income earner and the lower income earner. To some people, they will say to reduce the gap between the poor and the rich. How does government need to do that? Government need to assist the lower income earner. One of the ways government ensure equitable distribution of income, look at the recent Nigeria Tax Act that was signed. If you are earning 80,000 below from this Nigeria Tax Act, you will not pay personal income tax. So, equitable distribution of income. Government don't want to tax the lower income earner. The higher income earner, they will be the one to pay tax. Government want to ensure that the lower income earner don't pay tax. To some small companies too, if you are a small company, if your turnover is below 50 million, starting from next year, you will not pay company income tax as a small company. Government is assisting poor, the lower income earner. That is equitable distribution of income. Government should ensure that there should be fair treatment of lower income earner and the higher income earner, so that the gap between them will be reduced, so that those who are in the lower income earners too, in the next 3 years, they will become an higher income earner. They will start paying tax. Where the lower income earner reside, government should provide more infrastructural facility. Government should create good road. Government should provide potable water. Government should do a lot of things where the lower income earner reside, so that at the end of the day, those lower income earners, by the time they have adequate facility, them too, they will be able to earn more income and they will start paying tax. Another one is desire for economic stability. So one of the macroeconomic objectives is to ensure that economic is stable. There is stable economy. What does economic stability mean? It's talking about foreign exchange rate and our external reserve. Our foreign exchange rate should be positive. Naira should be appreciating against dollar. We should have a stable exchange rate. It's one of the macroeconomic objectives of government. Another macroeconomic objective of government is to maintain balance of payment equilibrium. To maintain what? Balance of payment equilibrium. This is another macroeconomic objective of government, to maintain balance of payment equilibrium. What does balance of payment equilibrium mean? Balance of payment equilibrium means when we have more exports than imports. What we export to the country is more than what we are importing. What we export out of the country is more than what we are importing into the country. Nigeria should be a producing country, industrialized economy. We should be producing what we are eating. We should be producing what we are consuming, what we are using in Nigeria. We should not be importing. A country that imports cannot depend on industrialization. What they will be solely depend on is going to be on tax, which is not good. Nigeria should be an industrialized economy. We should be producing. We should be exporting crude oil, exporting cocoa, exporting agriculture. We should be manufacturing goods and services. We should have a company in Nigeria that manufactures cars, different companies. We don't need to be importing cars. We should have a company that manufactures electrical materials, electronics. We should have a company, textile company that produce textiles. We don't need to be importing all this importation. We should have a company that produce phone. All these things. Once we stop importing, it will have a positive impact on our economy. Our first thing is going to have value on our rate of exchange. Our naira, we have more value. We appreciate against dollar. Do you understand? So balance of payments, equilibrium. Another one is provision of public goods. Provision of what? Public good. One of the reasons why government intervene in the economy is to provide what? Public goods. What is public good? Public good, they are the goods and services, like I said, provided by government, and consumer enjoy it at a free cost. Consumer don't pay for it. Even if consumer want to pay for it, they will pay a subsidized rate. So one of the justification why government intervene in the economy or macroeconomic objective is provision of what? Public good. Government want to provide road, they want to provide security, they want to provide street lights, and so on like that. So this is justification for government intervention. Now, what are the methods of government intervention in the economy? What method government use to intervene for us to achieve all these above objectives? What method government use to intervene in the economy so that we can achieve all these objectives I mentioned earlier? We have 4 methods of government intervention in the economy. One of the methods is called fiscal policy. Fiscal policy. What does this mean? It means those policies used by government to control expenditure, to increase rate of tax, to introduce borrowing. So fiscal policy consists of taxation, government expenditure, borrowing, public debt, subsidy. Government can use tax to control economy. If government want to reduce volume of money in the circulation, government will increase the rate of tax. Once the rate of tax increase, people will not be able to have too much of money because they will be paying heavy tax. If government want to discourage consumption of harmful goods like cigarettes, government will increase the rate of tax on those cigarettes. When government spend too much of money in terms of infrastructure, capital expenditure, it will have positive impact in the economy. The contractor who are doing the job, they will have money and they will pass the money around to some other people indirectly. When government borrow debt, that borrowing of public debt, if they use it judiciously, it will have impact in the economy. If government borrow public debt to construct a good refinery, once we start producing, it will reduce the price of PMS. Subsidy. There are some goods and services consumed by the public. Government subsidize them. Government subsidize them so that those who are earning lower income earner can have access to those goods and services. So subsidy is one of the methods of fiscal policy. Borrowing is one of the methods of fiscal policy. Taxation is one of the methods of the fiscal policy. National budget is one of the methods of fiscal policy. Why expenditures too? So this is one of the methods government use to intervene in the economy. Number one, like I mentioned, fiscal policy. Under the fiscal policy, we have different taxation, subsidy, public debt, national debt, public debt, national budget, government expenditures, and so on like that. Now, another method of government intervention in the economy is called monetary policy. Monetary what? Policy. What are the monetary policy of government? This one, governments use this tool to control the economy through policy made by CBN, through regulation of banking, commercial bank. So, example of monetary policy: open market operation, liquidity ratio, bank rates, moral suasion, mandatory deposits, and so on like that. Government use this to control economy. So in one of the methods of government intervention in the economy. Another method of government intervention in the economy is price control. Government has what is called price control system. Government, they have a regulator that regulates the price of goods and services. This is the price you need to charge. They prevent unjustified increase in the price of goods and services. There are some areas that government, they are the one fixing the price, like electricity now. Government, they are the one that will tell, this is the price band A we pay, this is the price band B we pay, this is the price band C we pay. Through, we are in the electricity industry, we have the DISCO. DISCO, they are the company providing electricity, distribution company, electricity distribution company. From who control all these DISCO? Government have an agency, a regulatory body that control this DISCO. They are called Nigeria Electricity Regulation Commission, NEC. They are the one that control the DISCO. They are the one that will tell the DISCO, this is the price you need to pay for your prepaid meter. You need to charge for your prepaid meter. So price control is one of the methods of government intervention in the economy. Another method of government intervention in the economy is commercial policy. Commercial what? Policy. What are the commercial policy? Regulation, rule made by government to control import and export of goods and services is commercial policy. This is also one of the methods of government intervention in the economy. So still on the topic of market failure. Now, we'll talk about sources of market failure. We said one of the sources of market failure is monopoly, while another one is externality. Another one is uneven income in distribution. This externality that we are talking about, let's look more, let's explain more on externality. What does externality mean? Externality simply means the cost or benefit derived by an economic activities as a result of activities of unrelated parties. That means the cost of benefit or benefit derived by one party due to activities of another parties. That is what externality means. When you are doing something, what you are doing, you don't know what you are doing, you are spending money, you are doing that thing. Then me, I'm benefiting from it. That is externality. From your activities, from the money you are spending, I'm benefiting for it. That is externalities. Your activities, when it's creating value for me, is externality. Activities of an this is the cost or benefit of an economic activities experienced by unrelated third party, or the cost or benefit derived by one party as a result of activities of another party. That is externality. Now, what are the type of externality we have? Generally, we have two types of externalities. We have negative externalities and positive externalities. Negative externalities and positive externalities. Let's start from positive externalities. What do we understand by positive externalities? Positive externality means the gain or benefits. The gain or benefits derived by one party or derived by an economic unit due to activities of another party, e.g., construction of road in a rural area. That is infrastructural development. If government construct a road in an area, if that area have a good road network, government, they are the one that spend money to construct the road. Do you know who are going to benefit from that road construction? Who is going to benefit? Who is going to create value from the road construction? Who will get value from that road construction? Tell me.
The people living around that are selling markets.
The people selling market in the area, they will be able to sell. Secondly, the landlord in the area, when you have a good road network, before you get to your house, within 5 minutes, there is no pothole. Everywhere is tight. You understand? It's going to increase the price of house rent. The landlord, they will increase the price of house rent. It's going to create value to them. The property value will increase in the area. The land value will increase in the area. These people, they have a good road. One plot of land is no more 50 million. It's now 80 million because they have a good road now. From the city, if you want to get there within 10 minutes, you are there. It will have value, infrastructural development. Whereas, who spent the money? Government. Who is getting the value? The resident, the landlord. That is positive externalities. Another one, research and development, R&D activities. Another example of positive externality, R&D activity. What does this mean? Some company like Coca-Cola, Nigeria Bottling Company, they will spend a lot of money on research and development. People are not buying drink of 500 naira again. I'm just using that as an example. They now say, what can we do to ensure that people will be drinking this Coca-Cola? The demand for Coca-Cola is low. What can we do? Let's go and do market research. Let's go and research. What does people need? They will go to the market. They now observe that people are saying because of the price, 500 naira for me to use to drink. It's too much. Coca-Cola can say, okay, let's have 3 types of bottle, this plastic Coca-Cola. Let's have a smaller plastic that we are going to be selling 300 or 150. Let's have another one that we are going to be selling. First one, we'll be selling it 200 or 150. Second one, either we'll be selling it 350 or 300. Why the normal one still remain 500? When you see, if a Coca-Cola have a small bottle that they are selling 150, what will happen to the demand? It will increase. Because so many people say, yeah, let me drink Coke now. Alone, 150. So it's not, the liters is not much, but they will still feel it. the demand will still increase. Some people cannot drink Coke now because they feel that 500 naira is too much for them. But going back to that, Coca-Cola are now doing, they have spent a lot of money to do research. They now launch, they will say, Coca-Cola mini bottle, it's sell 150. When they put it to the market, when the people are rushing it, what will happen? What will happen? Who can tell me what will happen? Their competitor, who are their competitor? Like Pepsi, what they will do?
They will copy the model.
They will copy the model. Look at what Coca-Cola just launched. Small bottle. Before you know, Coca-Cola spend money, use idea, do a lot of things to launch that product. But Pepsi will not spend too much of money because there are no this kind of what Coca-Cola are doing. It's easy for Pepsi to do that. That is what is called positive externality. The gain or benefit derived by one party due to activities or cause incurred by another party. So that is positive externalities. Negative externalities. What does negative externality mean? Negative externality means the loss suffered by another party, by a party or an economic entity because of activities of another economic unit. The loss suffered by an economic entity because of activities of another what? Economic unit. That is negative externalities. Example of negative externalities: air pollution. In an area where you have a factory, they will be producing goods and services. They are manufacturing. The factory is making a lot of money, but that environment, there will be a lot of air pollution in the environment. Those who are staying in the environment, they will not game themselves. It's going to affect their health. I remember there is an area very close to Secretariat when you are coming from Ojota. When you get to that area, in fact, the way you are going to feel, I pity those who are staying in the area because of the odor, smoke, smell. So, air pollution. Water pollution. Those who are in the Niger Delta area is water pollution. Oil and gas company, they are extracting crude oil from the water. But those who are living in the area cannot drink the water. They cannot use the water. Most of their fish in the water, they will die because of extraction of crude oil. That is negative externalities. Noise pollution. In an area where there is too much of noise, those who are in the area, they will suffer a lot. They will suffer a lot. Noise pollution. In an academic environment, you have a disco who are playing radio. Lecture is going on. The disco man is doing his own business. The disco man is making his money, but it's affecting the student receiving lecture. That is noise pollution. Now, what are the causes of externalities? What are the causes of externality? Generally, we have two causes of externalities. Generally, we have two causes of externality. We have production externalities. We have consumption externalities. Production externalities and what? Consumption externalities. What does production externality mean? What does production externality mean? The gain or loss suffered by an economic unit due to production activities of another parties. You are producing. Some people are making a gain. They are making some loss. Example, in an area where there is an oil and gas company, oil and gas company, as they are producing in the area, is going to create a lot of employment to those people, to the indigenous of that area. Because of that company, oil and gas company located in the area, they will get a lot of jobs. It's production external. As they are producing, they are creating value, they are employing people. Consumption externalities means the benefit derived by one party, the benefit or loss derived by one party due to consumption activities of another party. As we are consuming the good, another party is feeling the benefit or is feeling the loss. Example, generator. You own a generator. In your area, you own a generator in your house. At the window, and your generator is very close to the window of your neighbor. Your neighbor will be feeling the noise of the generator. But you are enjoying the lights. You are consuming the lights. But another party is feeling the negative effects. That is consumption externalities. Maybe you are the one that know how to, you normally drink, you normally smoke cigarettes. Somebody sit down beside you, you are smoking a cigarette. You are enjoying from smoking cigarette. You are consuming the cigarette. But the person sitting down to you is not a smoker. He's going to be feeling the smoke of the cigarette. It's not creating value to the person. So that is consumption externalities. We have another one. So these are the two causes of externality: production externalities and consumption externalities. So we have finished a topic on this market failure. The topic we want to talk first, we are discussing first is market failure and business cycle. We have looked at market failure. We have talked about what is market failure, what are the sources of market failure, justification for government intervention in the economy, what are the methods that government use to intervene in the economy. And we now explain externalities. We explain type of externalities. We explain causes of externalities. So this is all we need to do on market failure. Now, the second area is called business cycle. In this material, the second topic we want to look at is called business what? Cycle. What do we understand by business cycle? What is business cycle? Business cycle simply means economic cycle. In some textbook, they call it trade cycle. This implies that the period of boom or depression in the economy during a given period. Business cycle can also be referred as upward or downward movement of gross domestic product during a given period. Upward or downward movement in the national gross domestic product during a given what? Period. That is what business cycle means. The period of boom, the period of depression in an economy, it is business cycle. Some period, the economy will be favorable. People will have money. People will get money. When you are doing business, you make good profits. You are making money. Everything is going well. Price of goods and services is not increasing. You are earning 500,000 in a month. That 500,000, you are making, at the end of the day, you are still making a saving of 300,000 from the 500,000. That is a period of boom. But a period of depression, you are earning 1 million in a month. Tipa, you can't save 50,000 from the 1 million. That is depression. Economy is not friendly. Economy is very hard. People find it to eat 3 square meal. So, alternating period of boom, depression in an economy during a given period is called what? Business cycle. It also can refer as upward or downward movement in the national gross domestic product during a given period. What are the stages of business cycle? What are the stages of business cycle that we have? What are the stages of business cycle that we have? We have 4, 5, or 6 stages of business cycle. Let's say 5 stages of business cycle. Number 1 stages of business cycle, it means expansion period or expansion phase. This expansion phase is good, is very good. Economics is very good. This one, there is increase in various economic factors. In expansion period, there is full employment. People get job. People have something they are doing. They are not doing yahoo. They are not doing kidnapping. They are not doing ritual. People are, when they graduated from school, there is job for you. Can you imagine in the 1970s? In the 1970s, when you went to university, as you are graduating, you are doing your graduation like this, outside your university. People that want to employ you, they are there already. I was not born in the 1970s. But we are taught job is there for you. In the 1970s, if you are a chartered accountant, you are a millionaire, company, a lot of companies will be looking for you. Dunlop, Moby, this. No chartered accountant that will say he's unemployed. Abi is doing one crook job. As a chartered accountant in the 1970s, 1980, they will be just come and work with us. Come and work with us. That period is a boom period. Time change. Sometimes things will be good. Sometimes things will be bad. So expansion period means when there is increase in various economic factors such as employment, output, wages, there's increase in wages, there's increase in demand and supply of goods and services, there's increase in the rate of employment. So this expansion period is a positive period of boom. Economy is booming positively. There is increase in the flow of money. Everybody is doing well. No complaint. After expansion period, we have peak period or peak phase. In this one, the economy too is good. The economy is booming. The economic is positive, but it's not like expansion period. It's not like expansion phase. This one, the economic have attained maximum limits. That means the economy cannot be booming more than that, more than the limits, more than the present limits. The economic has, the rate of business activities has attained its maximum limits. There's a constant increase, no additional increase again. The increase now stable. That is peak. In this peak, there's a slow down or reach. Eventually, so in this case, the sales and employment level is stable. The demand is stable. The supply is stable. The employment rate is stable. No additional, no deduction in peak. After peak, we move to a period called recession. This period is called what? Recession phase. What does recession phase mean? In recession phase, there is gradual decrease in economy. In recession phase, the economy is going down gradually. The job that they are seeing, people are seeing job, but the job is not a lucrative job. The price of goods and services is increasing. The level of production is reducing gradually. The demand is decreasing due to increase in price of goods and services. So this is recession period. Depression. What does depression mean? What does depression mean? Depression simply means the cost of manufacturing of goods and services. The cost of manufacturing of goods and services. In this depression, the economy is getting worse. There's increase in the cost of manufacturing of goods and services. Company, the price of what they are using to produce the goods and services is increasing, and the demand is not increasing. In this depression, some people, they are now losing their job. This depression is worse than recession. What company will be using to manufacture product is more than the revenue that they generate in depression. So this is another stages of business cycle. Another stage is called tough stage. Tough stage. In this one, in this tough phase, the economic activities decline below the normal level. The economic activities of a country decline below the normal level. This is very worse than anything. In the tough phase, everything is very well. Most of the companies in Nigeria, in the tough phase, they are moving to the neighboring countries. Companies are closing down. Once they close down like this, some people will lose their job. They will start, you understand? They will lose their job. They will not get anything to be doing. In the tough phase, Yahoo business is a normal job. Parents can make it proud. Ah, my son is doing Yahoo. Criminality is not an offense. I was reading a news on Thursday. One of the chairman of a task committee, he's doing an interview. He's now saying everybody must be paying tax, personal income tax, and that. Somebody now asked, what if somebody is doing a lady that is doing, you understand where I'm going? He said, so you don't want to know where they derive income. It's for you to just say they should pay tax. Even they are doing bad things. They are engaging in prostitution. Prostitutes should pay tax. Is prostitution a business that government should be proud of? In the name of increasing government revenue, you are now telling people to go and be doing rubbish. Somebody doing Yahoo should be paying tax. That means in the long run, government, if care is not taken in the name of collection of tax, kidnapping too. If somebody kidnap, they can say the rate of tax on kidnapping business is 35%. They will start taxing them. It's not right. It's not ideal. By saying, you understand? What you should say is, government should collect tax on legitimate business, legitimate income. Don't let us encourage immorality in the name of collecting tax. We want to increase tax net. Nigeria tax rate is low. So you don't want to know where that man derives his income, where that woman derives his income. When you see the woman driving G-Wagon, you don't know the kind of job he's doing. You don't know whether it's a baby mama or something like that. You just want to collect tax. Is it right? That is where government want to collect tax by any means, and people are doing illegitimate business. So in the top state, the growth of economy is become persistent negative. The economy declined below the normal level. So that is top state. That is the worst stage economy can be. Most of the companies, they are relocating. Most of the people are losing jobs. The rate of begging is increasing. We now have a corporate beggar. They will just dress as a bank staff, putting on a good suit with a tie. You think they are going to work. God will help us in the countries. In the top state, you cannot collect loan from bank to do business because of the interest rate. The interest rate is very high. So that's top stage. So after the top stage, we have another stage called recovery stage. In this top stage, if a country are in top stage, they can go into war to change government. Government, see what you are doing. Everybody is suffering. We cannot take this over. Military, come and take over. Please, this government is doing northwest. They are just making money, but people are suffering. Most of companies are closing down. People will do a lot of revolution in the top state. When they revolute, what will happen to the revolution? After the revolution, after the country has collapsed, there will now be a recovery. So after the top state, economy will start booming again. Recovery means when you have experienced the worst stage, You now started again. The country start again. They want to rebuild the countries. So government is now saying, come and do business. We will not collect tax from you. Government is now saying, we will provide you security. Government is now saying, if you employ 100 staff, you will not pay tax. The more you employ, the less tax you pay, so that people can get job. Economy start recovering. Economy start waking up again. That is recovery stage. So this is all we have on business cycle. We have stages of business cycle: expansion phase, peak phase, recession phase, depression phase, tough phase, and we have another one called recovery phase. So, ladies and gentlemen, do we have any question on this, so that we can move to our next lecture material? In case we have any question, you can indicate and ask. In this our lecture material, it has some workings. We are going to do workings in the next lecture material. We are going to do workings, like 3 workings, the next lecture material. So, in the absence of no question, that will take us to the next topic called cost outcome analysis. Cost outcome analysis. What is cost outcome analysis? This cost outcome analysis, they are the different methods that's used for evaluating intervention. They are used different methods. Government used to evaluate their costs. Government used to evaluate their resources. Government used to evaluate their revenue. That is what cost outcome analysis is talking about. In this cost outcome analysis, we have different types of cost outcome analysis. Number one type of cost outcome analysis is called cost benefit analysis. Cost benefit analysis. Cost benefit analysis. In this cost benefit analysis, this compare costs of intervention to the monetary benefits. In this cost benefit analysis, we are looking at which of the projects that will give us highest benefits. Highest benefits. If we have 5 projects we want to do and we have limited amounts, which product give us the highest benefits? That is cost benefit analysis. This cost benefit analysis also implies that the benefit of a project, benefit of projects should outweigh the cost of the project implementation. If government spend 20 billion to construct a project, the benefit that they should see from that project should be more than 20 billion. That is cost benefit analysis. Ladies and gentlemen, construction of Lagos Calabar Coastal Road, government want to spend 5 trillion. Government, that is cost. But in the long run, it's going to create a lot of value to government. Government will derive a lot of benefit from it, because that area, that Lagos Calabar Coastal Road, By the time they finish construction, they will start towing the road. It's going to be towed. People will be paying toll gates. Secondly, when they finish the road, so many companies, they will establish so many companies in the area, in the road network of that Lagos Calabar Coastal Road. So many companies, starting from Eleko, go to Odeomu, go to different part of Ogun State, go to Ondo State. You will see a lot of new companies. When we have too much of company coming to Nigeria to come and establish, to come and locate in the area, what benefit is it going to create to government? Who can tell me what benefit in the long run?
Employment.
So the government, what benefit the government will see?
Taxation.
Taxation, my brother. Government will collect more tax. More tax. More tax. So that 5 trillion that government want to spend now, government will have assumed that the benefit that they will see will outweigh the cost. Taxation. That is cost benefit analysis. Another type of cost outcome analysis is called cost effectiveness analysis. Cost what? Effectiveness analysis. This one is talking about we have different projects. Which one give us the least cost of production? We are going to select the project that give us the least cost of production. So this one assess cost of intervention in relation to its effectiveness. Which of the project that will give us least cost of production? E.g., you want to construct 2 roads. You collect a design from that contractor. One contractor is saying, if you want to construct the road, 5 million per kilometer. Another one is saying 7 million per kilometer. If you want to select contractor based on cost effectiveness analysis, you are going to select somebody that give you 5 million per kilometer, because it's the one that have the least costs without affecting the quality. So this cost benefit analysis and cost effectiveness analysis, CBA and CEA, they are the most common type of cost outcome analysis. Cost benefit analysis, cost effectiveness analysis, they are the most common type of cost benefit analysis. All other one too, all other types they are not common like the other two. We have another one called cost utility analysis. What does cost utility analysis mean? You consider the quality life associated with the outcome of the project. Which project has long quality life? The project that has a long quality life is what you are going to take. Which project is going to stay long? We are not looking at the cost. We are looking at this project that we want to do, which one is going to stay long. That is cost utility analysis. We have another one, cost minimization analysis. This one is focused on selecting projects that has a least cost option. And this least cost option is based on quality standard. You select a project that has a least cost and highest quality. Highest quality. highest quality. So it's just like cost effectiveness analysis. Now, like I said, the two common ones is called cost benefit analysis and cost effectiveness analysis. We have talked about this cost benefit analysis. Let's look at what are the uses of cost benefit analysis. Where do we use uses of cost benefit analysis? What are the uses of cost benefit analysis? Cost benefit analysis can apply in different areas of industries, such as transportation, communication, education, healthcare projects, road construction. So cost benefit analysis apply in different areas of economy. Communication, education, healthcare, road constructions. Second uses of cost benefit analysis. Cost benefit analysis can be used to use in the allocation of resources among 3 tiers of government. Cost benefit analysis can be used in the allocation of what? Resources among 3 tiers of government. We use it to allocate resources between federal government, state government, and local government. Let me give an example. If government want to share VAT, using cost benefit analysis, which state do you think you collect highest share of VAT? If government want to share VAT to the state, using cost benefit analysis, which state?
Lagos.
Lagos.
Lagos State, because they are the state, it is the state government generate more VAT. That is what allocation of resources among 3 people. What do you contribute? If you contribute high, you get high share. So another uses of cost benefit analysis. Cost benefit analysis is used to determine shadow price of a project. We use it to determine shadow what? Price of a project. Shadow price means alternative price. If you don't use this, what alternative do we use? By using this phone, what alternative do I forgo? That is what cost benefit analysis is used for. So these are the 3 uses of cost benefit analysis. Classification of cost benefit analysis. How do we classify cost benefit analysis? We classify cost benefit analysis in 2 ways. We classify it, first one, externalities, while second one is called income distribution. We have explained externalities before now. I've explained that already under market failure. Why second
Please
classification
re-explain.
of
Not all of us were around then. Excuse me. Please, can you re-explain? We were not all here when you were explaining it.
Why second one is called income distribution?
I think the class is recorded.
So
Sorry, sir.
for the sake of time, the class is recorded. You will listen to the video. Do you understand? So 2 classes of external cost benefit analysis is called first type of cost benefit analysis or classification of cost benefit analysis is called externality. Why second classification of cost benefit analysis is called income distribution. Income redistribution. So, what are the procedures? Steps involved for conducting cost benefit analysis. What are the steps involved for conducting cost-benefit analysis. What are the steps involved? First, you examine the problem with proper definition of the analysis in focus. Examine the problem with proper definition of analysis in focus. That means you need to state objective of the analysis. State objective of the analysis. What are you trying to achieve? Another one is consider alternative courses of action. You consider what? Alternative courses of actions. You consider alternative courses of action. What are the alternatives we have? What are the different alternatives we have? Third one, you enumerate cost of the alternative. What are the costs of the alternative? What are the benefits of the alternative we have? You evaluate or enumerate cost and benefit of each alternative courses of action. After you list them, you evaluate them. Evaluating them, you state which one has the highest cost, which one has the highest benefits. From your evaluation, you draw conclusion on the particular choice you are going to take. And you are going to take the one that has the highest benefit, which is net benefit. In this cost-benefit analysis, we use an evaluation tool that is called cost-benefit ratio. How do we get cost-benefit ratio? Benefit divided by cost. In your cost-benefit ratio, your CBA, CBR, cost-benefit ratio, no, we call it benefit cost ratio. BCR, benefit cost ratio, must be higher than 1. That means your benefit must be more than your cost. How do we get benefit cost ratio? Benefit divided by cost. And the benefit must be higher than what? 1. After that, you examine the problem and you examine the problem and the choosing objective to determine accomplishments. So, ladies and gentlemen, in this question, what I think is very important for us is for us to look at some questions relating to cost-benefit analysis and cost-effectiveness analysis. Because of time, let's look at questions relating to them. Let's start from question 2. Question 2. Question 2. We solved like 3 questions. Let's start from question 2. So question 2. Somebody can help us read. Oh, yeah, go ahead.
All right, sir. Can I read?
Yes.
Okay. Given the data on cost and benefit of alternative health care projects being proposed by a Pare local government area with a fixed budget constraint of 7 million naira. Project A, 3 million naira, benefit 4,200.
Okay, go ahead.
Please scroll up, sir. Okay. Project B, cost is 1,250, benefit is 1,000 naira. Project C, 500, benefit 1,250. Project D, 800, benefit 1,040 naira. Project E, cost is 2,000, benefit 4,000. The last project, I think, 3,050 naira, then benefit 3,300. Scroll up, sir. Okay. The last project, 1,450, benefit 1,750. You are required to 1. Rank the project based on benefit cost ratio and select projects with highest benefit within the budget constraint. B. Determine the means of projects which yield the largest net benefit. C. Determine the project means that minimize the amount left over. Amount left
Subject
over.
to
So, okay, subject to constraint that project must have benefit cost ratio in excess of 1.
okay, thank you very much.
Welcome, sir.
Ipaye local governments, they have a project. First and foremost, look at what is the resources of Ipaye, what is their budget constraint, how much does Ipaye have, this local government, how much they have at their hand that they want to use for this project, how much?
7 million.
They have 7 million. So if they have 7 million in hand, 7 million, look at different projects that they want to do. If you add all the cost of all the projects, it's more than 7 million. If we add all the cost of the project, it's more than 7 million. That means they cannot do all the projects because of their resources. Their resources is limited. That means they need to select some project that they want to do based on their budget constraint of 7 million. In that case, first question said, rank the project based on benefit cost ratio. And you should select projects with highest benefits within the budget constraint. I want to rank a project based on benefit cost ratio. That means I need to compute benefit cost ratio for each of these projects. If I want to compute benefit cost ratio, how do I compute it? Like I said earlier,
Benefit over cost.
benefit over cost. So going to the solution now. I want to, I should ranking a project based on benefit cost ratio. We have projects, we have benefits, we have costs. If I want to compute the benefit cost ratio, let me take us to an Excel. Let me open an Excel so that people can see. They will not say this man. I want to share the Excel now. So the Excel is very important. It will make us understand very well. So looking at this question, we want to rank projects based on benefits cost ratio. We know benefit for project A, the benefit is how much? How much is benefit of project A?
4,200.
Why the cost is how much?
3,000.
So benefits divided by costs. Can we see the Excel?
Yes, sir.
Benefit divided by costs. It will give us what?
1.4.
1.4.
1.4. So project A, the benefit cost ratio is 1.4. Project B, the benefit cost ratio is 0.8. Project C, 2.5. Project D, 1.3. Project E, 2. Project F, 1.08. Project G, 1.21. Question A says, rank the project based on benefit cost ratio and select the project with the highest net benefit. Now, if I want to rank, look at my ranking. Which one do you think we carry first?
Project C.
Project C, 2.5. You can see in front of the ranking, I put first. Do you understand?
Yes, sir.
Which project do we follow?
Project E.
Project E, that is second. Which one follow again?
Project A.
That is third. Which one follow again?
Project D.
That is fourth. Followed by
Project G.
fifth. Followed by,
F.
and the last one is what?
Project B.
So I've ranked the projects. Part of question A, I'll do the project ranking based on benefit practice. Second part of question A, he said, I should select a project with the highest what? I should select projects with highest net benefits within the project. That means, based on this, my ranking, I want to select a project. Which project do you think I will select first?
That was Project C. Because
Project
he
C.
has the highest.
So if you see the second part, where I've started selecting projects. This is where I started selecting projects. The first project I select, Project C. I put the rank. It carry what?
First.
How much is the cost of Project C?
Cost is 500.
500. How much is the benefits?
Benefits 1,250.
I've selected that. Which one am I going to select next?
Project E.
E, which is second. It carries second. How much is the cost?
Cost is 2,000.
How much is the benefits?
Benefit 4,000.
4,000. The next project to select is who?
That's Project A because he ran third.
A. How much is the cost?
The cost is
3,000.
3,000. The benefit is 4,200.
Yes. While selecting a project, you should mind your budget what?
Budget constraint.
Budget constraint. You know, when you add all the projects you select, it must not more than your what?
You must know more than your budget. Yes, sir.
Your budget. After I select project A, which one can I go again? Which is fourth? Which one carry fourth? D. What is the cost?
800.
What is the benefit?
1,040 naira.
That means after project D, which one can I go again? I'm supposed to go to number 5, the one that carry 50, Abby?
Yes, sir.
But if I want to carry the one that carry 50, it will be more than my budget constraint if I add everything. That means I have to stop in T. If we add all the costs from C, E, A, T, if we add all the costs together, it will give you how much?
6,300.
6,300. You cannot select the one that carry 50. Because if you add the cost of the one that carry 50 to it, it will be more than your budget constraint. Have you?
Yes, sir.
So your budget constraint is 7,000. That means your leftover, the resources that you did not spend is how much?
700.
700. So your total project cost is 6,003. What is your total net benefit? Your total benefit?
10,490.
10,490. That's A part of the question. That is A part of the question. B part of the question said, what is the B part of the question? B part of the question.
Determine the mix of projects which yield the largest net benefits.
Determine the means of project which
Yield the largest benefits.
Largest net benefits. What is net benefits? What do you understand by net benefits? When you minus cost from benefits. Cost, you minus it from benefits. You get what?
Get a net.
Net benefit.
Net benefits. So I want to rank a project based on net benefits. Project ranking based on net benefits. Net benefits. Projects, benefits. You write the benefit first. You write the cost for you to get the net benefit. Look at project A. 4,002 is the benefit. 3,000 is the cost. What will be the net benefit?
1,200.
Project B, that
one has a negative of 250.
Project C,
Benefit of 750.
positive or not negative.
Oh, sorry.
Abi?
Yes, positive.
Project D,
Positive 240.
Project E.
Positive 2,000.
Project
F 250.
Project G.
300. Positive.
Now, based on this net benefits, rank them. Rank. Because I want to select a project based on net benefit. I will rank. Which one can I select for? Based on the net benefit, which one do you think we carry first?
Project E with 2,000 2,000 benefits. Sorry.
Followed
by project A.
1,002. Abi?
Yes.
Followed by
project C with 750 benefits.
Followed by
project G
with how much?
with 300 positive.
So the last one is what? The last one.
The last one is
Project B
C
with negative benefit. Abi?
Yes, sir.
Now, I want to select a project based on these net benefits. Which one can I select?
Project E.
Hello, everyone.
Welcome back, sir.
Hello, can you hear me?
Yes, I can hear you.
Please, you help me. You help me to share the screen. My laptop battery is low, and I'm not at home now. I'm in our center in Isolo. There's no light for now. So I'm trying to let them on again so that we can complete this question. And I would like us to solve 2 more questions on this cost benefit analysis. So please, somebody can help me share the screen from the material.
There's no solution on the material, sir.
There is solution on the material. In the material I share, there is solution there. So my laptop battery is low now. So just let me share the screen. Okay, we are in the second question. The second question is talking of we should select a project with the next net benefits. You should select a project with what? Highest net benefits. So based on that, we have do the ranking. Which project do we think we can select first? Which project do you think you can select
Project
as
E.
before? Project E. That is number 4, Stabby. The one that
Yes,
has the
sir.
highest net benefit. Why? The next project is what?
Project A,
Followed by
followed by project C.
project C. So, followed by, after project C, which one do you think follow?
That's project G.
Oh, sorry.
G. G.
At the end of the day, the total cost of the project we select is 6,950. Abi,
Yes, sir.
our budget constraint is how much?
7,000.
7,000. That means based on net benefit selection, what is the total benefit of the project that we select? Total benefits
Total
of the project
benefit
that
is
11,200.
11,200. So let's go to question C. Question C. Question C. Question C. Oh yeah, please help us read the question C.
Determine the project mix that minimize the amount left over, subject to the constraints that budget must have benefit costs ratio in excess of 1.
Okay. Determine the project selection. Let me read it again.
Determine the project mix that minimize the amount left over, subject to the constraint that projects must have benefit cost ratio in excess of 1.
Okay. Now, what this question C is saying is, what factors are we going to be used to select the project? What factor are we going to use to select project? Benefit cost ratio, Abi?
Yes, sir.
In this C, they say we should use benefit cost ratio. But the benefit cost ratio we must select must be more than what? Must be more than 1. He now said we should determine a mix of project that will minimize leftover. In A, how much leftover do we have in A? Good morning. How much leftover do we have in A?
700.
They are now telling us that using benefit cost ratio to select a project, we can do a project means that the leftover will be minimized. Do you understand? They're now saying this one, don't use ranking. You can select any projects. But the project you must select, the benefits cost ratio must be more than what?
1.
1. If you go to A, you can see the ranking of project based on benefits cost ratio. Abi?
Yes, sir.
We can select any of those projects. We are not using ranking. Any project that the BCR is more than 1, we can select it. But it must minimize our leftover. What combination? This question is asking us, we should do a permutation. We should do a permutation that if we want to select a project, so that leftover will be more than, let me scroll to that C part. C part. So in the C parts, if we want to minimize our leftover, in the C parts, we need to select project C, E, F, and G. We need to select them together. We need to select. You will look at it that we will go to A using the project benefits cost ratio that you did in A. You go to A. The first thing you have done in A, that benefits cost ratio. You will select a project that you will combine some project together. What combination can you do that the leftover will reduce? If you look at combination I do, that the leftover will reduce. If you look at the combination I do, that the leftover reduce, I select C, I select E, I select what? F, and I select what?
G.
G. At the end of the day, if we add E, project C, E, F, and G together, if we add them together, how much is it giving you at the total cost?
7 million.
7 million. Do we have any leftover?
No, sir.
That means we have minimized our leftover. We have do what? We have minimized our leftover. We have minimized our leftover. There is no leftover again. That is what C is asking us to do. We should do a project combination mix using benefit cost ratio. But any project we want to select must have benefit cost ratio in essence of 1. That means we cannot select project. There's one project that have benefit cost ratio that is less than 1. Which projects?
B.
They have benefit.
Project B.
We cannot, when we are doing this mix of project in C, we can never add B because it has benefit cost ratio that is less than 1. Do we understand? Do we understand this C part of the question?
Yes, sir.
Sir, I don't understand it though. I went out to get some, just came back now. Please, you can please run me through it, please.
You don't understand?
I just came
Read
back
the
now.
question. That one is not the lecturer excuse. It's not the lecturer excuse. I will go back, but it's not the lecturer excuse. It's not an excuse. Read the question C. They say you should select a means of project that has the next benefit cost, that have the benefit cost ratio in essence of 1. Do you understand? So we are saying we want to do a project combination. The project combination will do the benefit cost ratio must be more than 1. So, and we are looking at what combination can we do? What combination can we do? About the 10 my agenda. Let's see another class online. Almost we are alone. Yeah. So, so please, the second question I'm going to solve, I'm going to use my laptop to do it Excel. So I'm going to use my laptop to do it so that for us to understand.
So
will
this
go back.
class is ending by 10. No, we have
The class
another
is
class
ending
to
by 10.
join.
Yes, it's ending by 10:15. Look at the timetable. It's ending by 10:15. Do you understand? Even the next lecture, I'm the one taking the next lecture. I'm the one
No,
taking task.
it's 10 or not 10:15. Oh. The next
Based on the
lecture will
timetable.
start 10:15, an
Okay.
interval of 15 minutes.
Yes.
Okay. Please, let's solve one more question, my people. Hmm? Let's have one more question. Before the next lecture, I will send a message to task students. The next lecture will start by 10:20. I want us to solve one more question on this cost benefit analysis. Please. So let's look at question 2. Question 2.
Question
So
2
you
is what
can,
we just did.
huh?
Question 2 is what we just solved.
Okay, question 3. Question 3. So let's look at question 3. Can you go ahead?
David, please share your screen.
Question 3 is there now.
Huh? Please read question
You have
3.
to scroll down. You have to scroll down for the reading now.
So please you can stop sharing. I have access to my laptop now. So I will share the question. So and I will. Okay. Question 3.
Mr.
Question
Sunday,
3.
mute. Oh. You are not muted.
Question 3. Question 3 is not okay. Which question do we to solve that is calculation? Let me see. Question 4. Please, let's go to question 4. Question 4. Question 4. Somebody should help us with question 4. Question 4.
Abeokuta State of Nigeria is contemplating executing a road project with a special allocation from the federal government. The Finance Management Committee that was set up received 2 proposals from the State Ministry of Works for the project execution. The first proposal is on executing the project by direct labor, while the second is through the award of contracts. Option A, direct labor. The direct labor anticipates the project to be completed within 9 months from commencement and includes the following associated costs. Move on, please. Direct Details and amounts. We have direct materials 10.2 million, cost of hired supplementary labor 3.6 million, cost of fuel, lubricants, and stationery, especially for the project 1.8 million, estimated cost of repairs of vehicles, plants, and equipment to execute the project 7.2 million, estimated incidental costs, contingencies 1.2 million. Then we have total anticipated costs 24 million. If the project is
Okay.
executed using direct labor, material savings of 2.7 million are expected. Additionally, the engineers have estimated the cost of repairing unexpired vehicles at 2,880,000 by the end of the project year. Option B, contract award. The contract award fee is estimated to be 23,400,000. Other relevant costs are 1. Cost of job specification, bill of quantity, etc. to be paid for separately by the state government. Amount 1.2 million. Then cost of advertisement in respect of the invitation for public tenders, that is 600,000. And total anticipated cost is 1.8 million. The contractor has agreed to finance and complete the project within 6 months of commencement, with a deferred payment period of up to 4 months thereafter. If the project is executed through a contract award, the state government can invest the estimated savings under direct labor option. Please scroll up. Government can invest the estimated savings under direct labor option in a short-term deposit account at an annual interest rate of 15% up to the time the contract payment is due. The cost of job specification, bill of quantities, and advertisement as in option A remains unchanged. Required. Advise the Finance Management Committee on the option to accept.
Okay. Now, these people, they have two projects to take. It's either they take A, option A is to do the project by themselves using direct labor. While option B is to award the project to who? Contractor. They are looking at which one to do. What type of analysis is this one? What type of analysis is this one?
Cost effectiveness.
Cost effectiveness analysis. We want to select a project that have a least cost. Let's look at option A. What is the total cost of option A? Option A, the total cost. First, look at the cost that they will spend on the direct material, cost of hiring on labor, estimated cost of repair. That means the total estimated cost of option A, the total estimated cost of option A, anticipated cost, the total anticipated cost of option A is how much?
24 million.
24 million. If you want to take option A, you will spend 24 million. If you spend 24 million, still on option A, there is a note on option A. They said if the project is executed using this direct labor, which is this option A, there will be material saving of what?
2.7 million.
What do we do to this 2.7 million to the 24 million? Are we going to add it or less it?
Less.
We will less. And there will be estimated cost of repairing on expired vehicle of 2.8. This one too is savings. So 2.7 million and 2.880, they are savings. We will less them. We will less them from the 24 million. We will less the 2. At the end of the day, how much will be effective cost of option A? The total cost that we used for direct labor of option A is 24 million. The savings we will save 2.7, 2.880. The two together is what? 5,580,000. That means effective cost of option A is how much? 18,420,000. Option B, we want to use contractor to do it. How much is the contractor want to charge us? How much contractor want to charge us? How much is the contract fee?
23.4 million.
23.4 million. Apart from this contract fee, how much are we going to spend again?
1.8 million.
1.8 million. We add everything together in option B. We add it. 23.4 million, 1.2 plus 600, 1.8. That means the total cost we are going to spend in option B is how much? 25 million, 200,000. However, in this, they now said if we adopt this option B, that cost we want to spend in option A, that direct labor cost that you want to spend in option A, you will save it all. It's going to be saved. Once you save it, it's going to generate interest to the government. They said if the project is executed through option B, which is contract award, state government can invest the estimated saving in direct labor option in a short time what? Deposit. That means if they do option B, cost that they're supposed to 24 million direct labor cost that they're supposed to incur in option A, they will save it. If they save it, it will yield interest for what? How many months? It will yield interest of how many percent?
15%.
15%. My question is, this 15% times 24 million, but how many months do you think they want to do option A, option B? How many months they want to, that will take them to complete option B?
6 months.
How many months?
6 months.
6 months.
It's 10
They will
months.
complete option B within 6 months. But if they want to pay the contractor, how many months do you think they will pay the contractor?
4 months after.
4 months
Making it
after.
10 months.
4 months after.
10 months.
After they finish the project, they will now pay the contractor 4 months after. That means the total months that option B take is how many months?
10 months.
10 months. That is the month you are going to calculate the savings. So if you want to look at the saving in option B, how much do we want to save? That direct labor cost, 24 million times 15 times 10 all over what? You know, interest is per annum. Times 10 all over what? All over 12.
12.
Because it's 10 months, it's not for 1 year. Assuming it's 1 year, what we need to say? 15 times 24, Abi? But
Yes, sir.
since it's 10 months, we need to prorate the months. Times 10 all over what? 12. That means we are going to get a savings of 3,000. When we minus the saving from the total cost we are going to spend in option B, what is the effective cost of option B?
22.2 million.
So now, either option A or B, which one are you going to advise them to select? Which one has the least effective cost?
A.
Option A.
A has the least effective cost. So you write a note, my people. You let them know. If the contract, you let them know. You need to make a decision. What is your decision? The state government is advised to execute the job through what?
Direct labor.
Which is Option A. Who shall have effective cost of option? Effective cost of how much? 18.48 billion. So you need to let them know. So, ladies and gentlemen, we have another class tomorrow again. Online class, PSAF class. I don't know the time, but I will ask the management. We have to do another class tomorrow. So from tomorrow, we will solve one question again in this cost benefit analysis before we move to the next topic. One of the topics we are looking at tomorrow, we want to do, is called ease of doing business. It's one of the new topics introduced into your syllabus. Ease of doing business. So somebody raise hand. You want to ask a question. What is your question? Go ahead.
Sir, please, the question here said that if the project is to be executed through contract award, the state government can invest estimated savings. So I was thinking that it is just the saving in that option A that we're going to calculate that interest on instead of the total anticipated cost, or use the cost instead of the savings. That was my first thought though.
Okay,
But
the
why?
state government can invest the estimated saving under direct labor cost in a short time. We will look at this tomorrow, please, so that we can have a break. We will start from here tomorrow.
Okay, sir.
Please, yes. So this is 10:50 already. So we are starting our task class by 10:30, right? So we will start from here tomorrow. Thank you very much.